we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. The top headlines at this hour. While Indian markets continue to trade under pressure for the second straight day as the Nifty trades below the 10,750 mark, drug makers weigh India VIX declines. And open interest surges in SRF and United Breweries as investors take fresh long positions in their futures. Saudi Arabia sticks to its stance, seeking to hike output as Russia tries to convince Iran to give in. And Alok Industries lenders approve GM Financial, ARC and Reliance or RIL's joint bid for the company. That's a Bloomberg Quint exclusive.
Okay, let's see what's happening as far as the F&O markets are concerned. Clearly, there seems to be a lot of support that's coming in at the 10,700 mark. The Nifty is down by almost 27 points. The premium is shrunk to just 3 points. If you're looking at the Nifty Bank itself, the Nifty Bank is also seeing selling. It's down almost 120 points. So from the peak of yesterday, it's fallen more than 250 points currently. The Nifty Bank premium actually going away and probably trading at a discount at this point of time. So it shifted from a premium to a discount. Very surprisingly today at the 10,700 call, almost a 5 lakh shares is the open interest build-up that we've seen. So, the bears are trying to get in support at levels of 10,700. Put writers are, call writers are aggressive at 10,700. 10,800 and 10,900 level. So there seems to be enough traction that's coming in at these levels. As far as the total open interest is concerned, you can see that the market will continue to move in between the 10,700 and 10,800. From 10,700 to lower levels is the put writers or the bulls that are active, and from 10,800 to higher levels at to almost as high as 10,000 or 11,100, it's the call writers or the bears that are active in trade. So it looks range bound, but 10,700 keenly watching out for that. A big support level for the market. But Agam, on the future side, what are we seeing?
Well, I'm sure there are a lot of stocks out there which are looking at substantial increase in open interest. So let's pull up that list where we have another 15% added in SRF, and SRF continues to dwindle. See, there are some concerns starting to come in, especially given so much volume in the spot market and substantial increase in open interest towards fresh shorts for SRF over the previous couple of sessions as well. So that continues to remain weak right now. But United Breweries on the other upside is starting to see some longs building in, considering its open interest has increased by as much as 1%. Jet Airways, which it's been keeping moving in and out of the F&O band right now. Well, that's up 2% right now, and there's a surge of open interest as well. Strides Shasun on the other hand, on the losing end, is looking at some shorts build up, and Godfrey Phillips is somehow taking the mantle right now, and we're starting to see some speeding up in terms of OI increase. So that's as far as some of those increase in open interest is concerned in terms of stocks. Considering we are heading into expiry, let's take a look at some of these stocks which may see unwinding as well in terms of open interest. And CG Power, of course, is the only one that stands out to a certain extent. But do remember, CG Power went into the F&O ban yesterday. This is after some upgrades came through, and it's actually wiped out all the gains that it made yesterday. So it's down as much as 2% right now. Some unwinding coming along as far as CG Power is concerned. Not too much to speak for otherwise. Again, I'm going to keep an eye on some of these IT counters which have been buzzing, and of course SRF, which continues to show weakness in trade, Darshan.
Okay, so that's the view that we're getting in on the stock specific side. But before we get on our guest on the show, here's a quick reminder: if you have any queries regarding futures and option market, you can call us on 022 45404141 or write to us on Twitter, Facebook with the Ask BQ hashtag. So that's how you can contact us, and we'll get all your queries answered. Let's welcome our F&O experts for the day. Jay Thakkar of Anand, Rathi and Navneet Daga of IIFL Wealth are joining us on the show. Thank you to both of you. Jay, let's start with you. What's your view on the overall market?
Hi, good morning, everyone. Well, overall, I think that the markets are in a downtrend right now. considering that it's been trading within a range of say 10,900 to 10,500 since a couple of trading weeks now. But now I think that the way the indicators are going into the sell mode, the way the stock, the index is facing resistance at the levels of 10,800, 10,900 zones, and we have seen a decent writing happening at the higher levels compared to the put writing happen at the lower levels. I think the bears definitely have an upper hand. So I think going forward, the short-term call would be that one can sell Nifty targeting 10,600 with a stop loss of 10,765. And going forward, I think the way the index has also formed a good bearish head and shoulders pattern on the hourly charts, the short-term target does come to 10,600. So I think going forward, we will see selling pressure coming at the higher levels, and remaining on the short side on the index would be the right strategy. I don't think at this point of time there is any such evidence also from the global markets wherein we can say that yes, the breakout is likely to happen on the upside, which was a kind of a situation a week back. But then now it has absolutely reversed from up to down.
Navneet, good morning to you as well. I know that the last time we spoke to you, you were, well, relatively cautious. Are you maintaining that stance right now? And are we likely to see for more weakness based on your views that you gave us last time?
Yeah, hi, good morning, Daga. Look, the data points are not very encouraging. If you look at what is happening to the entire emerging market space and what are the kind of outflows that we are seeing, the kind of relentless selling that we are seeing from the FI side, both in cash as well as in the F&O side. However, one point that highlights me, the screen is not that weak in that the broad headline index level, largely led by what is happening within heavyweight stocks likes of HDFC Bank, Reliance, Infosys, TCS. So to my understanding, the broad headline indices might still remain in the broad range, and we might see more consolidation going ahead rather than seeing a breakdown trade. But on the stock specific side, or in fact I have to point it out on the mid cap side, I'll still be very cautious, and that's a similar kind of a view I'll still share, because I don't see any major turnaround happening. Neither the charts are shaping up that well, neither the data points are turning out to be very positive. So to my stance on the higher side, will continue to face a lot of pressure because what is seeing. But in the current series, at least for going forward for the fag end of the June series, to my understanding, it would be very difficult for the market to breach about 10,800 levels on the higher side. Similarly, 10,700 seems to be a very important support zone on the technical side, as well as on the, if I look out on the options data, we are not seeing any major unwinding on 10,700 puts. So to my understanding, the consolidation will continue for the series.
Okay, so Navneet, with that, based on, I believe that you do have a short straddle when it comes to the benchmark. But before we go and take your strategy, let's take a look at what a short straddle strategy means. So a short straddle is when one sells an out-of-the-money call and an out-of-the-money put in anticipation of decrease in volatility. When volatility decreases followed by a contraction in option premiums, the strategy becomes profitable. With that, Navneet, can you take us through how you would play your short straddle on the benchmarks?
Look, firstly, I'll highlight a few key points that basically why I'm choosing the strategy is basically last 3 weeks we have been advocating short straddles, short strangles, and then working well on the markets on Bank Nifty as well as on the Nifty. Last 3 consecutive expiries on the Bank Nifty was at 26,500, near to 26,500 levels, and that speaks volumes in terms of consolidation that is going on in the kind of a headline index. Similarly, having a similar view, the Nifty VWAP trades for the monthly stands at 10,750 levels, and we are exactly near to that level. Similarly, the consolidation 10,700 puts writing as well as 10,800 call writings give me a feeling that it would be a range trade continue for this next week going forward to the next week. Having a similar view, what we are suggesting is basically one can sell at 10,750 call and put options. The combined premium currently would be in the range of around 135 points. I'm expecting the market to be in that range. On the lower side, one can keep a strict stop loss if the trades the spread widens towards 185 levels. And similarly, one should look to book profit at the levels of somewhere into 40 points to 10 points. My understanding is the expiry should be very much near towards 10,750 levels for the June series.
Okay, what about you, Jay? Do you have any option strategies for our viewers?
See, basically, I would say one can remain on the short side on futures. As I said, my view is negative. But as far as the options are concerned, just to minimize the risk, what one can do is one can buy 10,700 put and sell 10,600 put. That's a bear put spread. The reason is that I'm not seeing in this series the index to go below 10,600 or 550, which is the previous swing low. In the next series, yes, I think that those lows will be broken and we'll see much further levels. But as far as this series is concerned, this tight range should hold of 10,500 to 900, and the index should trade with negative bias, and hence I think a bear put spread by buying a 10,700 put and selling one lot of 10,600 will minimize the risk of going wrong if someone is short on the futures.
Okay, so that's where things stand when it comes to the benchmark indices. Let's shift focus to some stocks then. Navneet, coming back to you, what stocks are you recommending to trade on when it comes to markets such like these?
Look, again, I'm going to stick to my strategy of basically finding out the stocks which are not participating in the rallies, and similarly looking to find out stocks which are, even the markets are moving up, are showing some weakness. One stock which I'll carry forward from the last trade was basically BEL, Bharat Electronics. It is a terrible chart. It has seen a quite weakness. We have recommended the last time at around 118 levels to go short on the target price of 110. That has been met and the continuous weakness has been visible. So to my understanding, one can look to even sell at the current market price within stop loss now at a smaller stop loss of 111 and look for immediate target of 102. The second stock was my radar was SRF. It has seen a major cut today. However, my levels have already surpassed. I was looking for a shorting in the levels of 1750 with a target price of 1690 on the lower side. But it has already seen a very sharp cut the time that we speak. To my understanding, one should wait for shorting the stock at the current market price. One can wait for levels of 1740 to 1750 for an entry price, with a stop loss on the higher side of 1780 and looking for a target of 1690.
Jay, anything on the stock specific side that you like at this point of time? Anything that you're spotting or recommending at this point of time?
Well, I would say that today I don't have any such stock-specific idea as far as the futures is concerned, because the reason is that, see, we have been seeing this consolidation happening, in wherein we are seeing some stocks going up and few stocks in fact going down, and it's quite a choppy trade, in fact, I would say, quite tricky as of now, and would like to wait for the OPEC meet and check whether there is some relief rally coming for the OMCs or not, and which could help the market in fact to recover. If not, then there would definitely be some pressure coming in the markets. As of now, I would say there is only one place to hide for the investors, I would say, for the short-term traders on the long side, and which I have been recommending this since past 3 to 4 weeks now, is the Nifty Pharma or pharma stocks. These are the only stocks wherein I think it's with a very high probability one can buy at each dip and have a sound sleep rather than going long in other stocks. And in this kind of a volatility, even if you're short on some stock which is not showing that kind of a weakness, you might be in a short trap because of the short covering. Because next week being an expiry, I would like to wait and watch for the opening on the Monday, and thereafter decide the strategy for the entire expiry week, rather than in fact preempting a day before the weekend.
All right, fair enough. In that case, let's address some active stock futures. And again, SRF is right at the top of, these stock futures, which are actually seeing substantial increase in open interest. So SRF, of course, has been quite weak of late, and it has come off crucial levels as well. It's currently seeing another addition of near 12-13% in open interest, even as its underlying declines by 4%. Navneet, how are you viewing trade on SRF? Would you recommend fresh short positions at this point in time for SRF, or would you wait and watch for more moves on this one?
Look, I already spoken about the SRF in terms of it's my trading call recommendation, but the levels have already been surpassed. I was looking for a target of immediate 1690 odd levels. The risk rewards at the current market price will not be very favorable. To my understanding, I will wait and look for some relief rally on the high side of at least 1.5%. and the entry price of 1750. But the overall the setup as well as the build up, it's looking to be the much more lower levels are coming on the stock going forward. So by any upside should we look to use to go short on, and on the higher side one can keep a strict stop loss on the higher levels of somewhere near to 1780. But the entry range should be in the range of 1745 to 1750.
Okay, one of the other stocks that's buzzing in trade, and we can pull up the intraday chart of IDBI Bank, and you can see the big spurt that's come in. Jay, any view on IDBI Bank? It's managed to rally almost 4% in trade.
Well, see, I would say, that's what I've been saying, that, there are few banking names which are in fact going down, Canara Bank, Vijaya Bank, and there's, a few financial names wherein we are seeing this spurt. But then IDBI, I would say, on the upside again has a clear resistance at the levels of 64. It really needs to take off those levels of 200 DEMA resistance. If it manages to take off those levels, then yes, IDBI might have bottomed out for the medium term, in fact, not for the short term, and then it would continue its rally towards 75 levels. But then 63.50 to 64 is a very crucial level which it really needs to take off and provide a close above those levels. So this one-day pullback for me would confirm the reversal only if it closes above 64.
All right, so IDBI Bank, that's the view coming in there as well. Let's pull up United Breweries as well, and see how that's trading right now. We are looking at flattish cues coming in through, but United Breweries of late has been relatively stronger. It's currently trading at around 1280, 180, 1282, and again an increase in open interest. So there's a spurt out here. Jay, coming back to you on United Breweries, any views here, any levels to watch out for, or what you can do, ideas?
Absolutely, this is one stock, I would say, United Breweries, which has been doing quite good. And this is really, in a clear uptrend. The stock is trading above its short-term moving averages, its medium-term moving averages. The stock has taken off its multiple swing resistances. And I would say that each lower level, the stock has a good support. In fact, I would say it has got a good support till the levels of almost, I would say, 1150. Until those levels are not broken, I would say for the medium term, the overall trend for the United Breweries is absolutely bullish. On the upside, we can see this stock heading towards the levels of 1400 or so going forward in the medium term. And this I've been recommending since a couple of weeks now, that United Breweries has taken off its crucial weekly resistances, and the stock is heading towards 1400 and plus levels. So I would say yes, one can continue to trade with a positive bias.
All right, so a positive bias is seen in United Breweries. That's Jay's view on this one. But let's bring up NIT Technologies. And I know that every second session we talk about NIT Technologies, and that's what we've been doing over the past few weeks as well. But this time around, it's on the decline. It's at around 1103, and it's actually moved down in 4 of the last 5 sessions. In fact, the second consecutive session, we're looking at some weakness here, and there's a surge in open interest as well. Navneet, it's an interesting one because we've seen a lot of strength in NIT Technologies, not only in the last 1 or 2 months, but even on a year-to-date basis. It's outperformed a whole host of stocks out there in the mid-cap space. But considering the weakness that we see in the last few days, is this a little bit of a reversal in trend, or is this just one of those blips, and can this be taken as an opportunity to go long in, well, should I say, the near term?
Look, the stock has been a clear uptrend, overall uptrend. The minor blips are being visible on the screen in the entire mid-cap basket, mid-cap IT basket. But similarly, my view is that one should, that looking at the overall strength on the larger time frame. My understanding is basically one should look for entry price. I'm not looking at the immediate trend reversal because they have not confirmed it yet. To my understanding, I would be waiting for levels of somewhere in 1080 to 1090 range. That is a good entry price for the stock to be entering into. Because look, the stock has been quite volatile, but the merit is basically if you're finding in the dips on the stocks on the they have been rewarded well if you're patient enough for a week or two. You're getting a good entry price with a small stop losses. You can trade with the long bias. To my understanding, these are not reversal points still at this point of time on overall mid cap IT basket.
Okay, let's take in some of the queries that have come in. Shravan Kumar has said that he purchased one lot of escorts at 910. What should he do? Navneet, can you take this one? 910, where he has one lot of escorts.
Look, surprisingly, the escorts have not been able to hold on the higher levels. I was looking at the levels of somewhere into 920 to 930 range. That has become a very crucial resistance zone for the escorts on the higher side. Since it has broken down and the key support zone of 900 down to understanding the immediate chart pattern suggests that to my understanding that can see further weakness. Further weakness at the levels of at least 850 odd. But again, this is if you look out at the broader time frame, the stock has been in an uptrend and looking like this is a minor correction it is going through. So it can find the levels of 850. If you can manage to hold on to that level, again you might get a price of exit price. But I'll say that since if you're looking for a very short-term trend, to my understanding, if it started to break below levels of 875 on the closing basis, you should look to exit at least from a trading perspective.
All right, so that's the view on escorts. Now let's pull up BEL and see where the futures are trading at, because our next query is on BEL. The question really is on you know, what a person can do in the cash market. So that's BEL futures for you at around 108. It's down by as much as nearly 1%. So it is losing out. There has been a little bit of an increase in open interest of around 1.5%. We already have Navneet, and he is actually recommending to sell BEL. And if I'm not mistaken, he's looking at a target of around 102, which is 6 points lower from the current market price. The query on Facebook comes from Kunal Chatterjee, and he says, I have purchased 1,000 shares of BEL at about 117. What should I do? Jay, can you come in on this one? Now, the viewer does have a position in the cash markets. So the first question would be, what can he do with his position if it is a trading position? That's one. And the second one is, if he wishes to hold on to his cash position, then in that case, how can he hedge his bets in the current market?
Well, I would say if someone is really holding this in the cash, and then you know, if the stock is declining, the kind of fall which we have already seen in this stock, and the way the stock is heading lower in the downward sloping channel with a clear sell crossover in its momentum indicators, there is no point of being long in this stock. Now, you know, if someone is really doing bottom fishing, or you know, the stock has reversed so much or fallen so much, then you know, if someone is buying from the trading point of view for a bounce, then I don't see any sign of a bounce out here. Okay. So first is that, and second is, if at all it continues to fall, then if someone wants to hold it for now, for the medium term, then I would say this stock has clearly support at the levels of 101, 100 zones. So till those levels, this stock can fall, and if the gentleman can hold till those levels, then I think yes, from those levels one can buy or average it out, and you know, play out the bounce and make the profit out of it. But if one cannot hold till 101, 100 zones, then I think yes, you know, one should exit right away, because as of now the trend is negative. The open interest is getting built up on the short side, so no sign of reversal as of now from technical or derivative data.
Okay, the next query comes in from Pankaj Pandey on YouTube. He has a query on Reliance Industries. He has one lot of Reliance which he bought at 980 rupees. Should he hold or exit? Jay, can you help Pankaj with his query on Reliance?
Reliance, I think one should book profits out here if someone is trading for the short term. The reason of me saying this is because this stock has recently rallied quite smartly from the levels of say 900 till the highs of almost 1040 approximately, right? Now it has reached the upper Bollinger Band of the expansion. In fact, this stock was trading within this range of 1000, 1020 to 900 on the lower side. So it's a breakout. In fact, I would say yes for the medium term. For the short term, from the expiry point of view, I think that there can be some profit booking coming in this stock, wherein this stock can again slide back below the towards the levels of 1000, wherein one can get again an opportunity to go long. So the medium term bias for me for Reliance is absolutely bullish. For short term, since there can be some retracement of this recent rally which we have seen in Reliance for almost say 15% odd, so you know, there can be some profit booking. Hence, one can get an opportunity again to get in this stock for the trading point of view. So I think yes, book profits right now and do get a good entry at the lower levels at around 1000 or so.
All right. So there you have it. Well, Jay's recommending to book profits right now in Reliance Industries. We'll take the next query from on YouTube from Shivansh Kulshetra. His question is actually quite straightforward. He sold the Nifty 10,400 and put, and his question really should be, what should he do? Well, he does have a way, a little time before his put can, well, create problems for him by going in the money, considering the Nifty is currently trading at around 10,700 and thereabouts. You know, and considering also that the maximum open interest is in puts is currently at around 10,700, that's followed by 10,600. So there is a high chance that he could make some money in this particular position. But I'm going to not hazard any guesses on this one. I'm going to put it with our experts. Navneet, he's sold the 10,400 and put. What would you recommend? Should he hold on to his position right now? He hasn't mentioned if this is the June futures or the July futures. We are going with the assumption that this is the June futures.
Which strike that the gentleman has chosen? 10,400.
Yes, 10,450.
To my understanding, there is no hassle in saying that this series, it is very unlikely that we move towards that level. To my understanding, there's a chances that we might see a blip below 10,700, but absolutely the kind of data point that I'm getting and the kind of an open interest buildup that I'm seeing, I would be comfortably saying that if someone has sold 10,450 put options, it's likely to expire at a zero price. And the chances that it's getting in the money is almost, I'll say that it's 1 or 2%. I'll say that 99% chances that this particular strike price will expire out of money. So one can hold on to this position and wait till expiry.
Okay, Jay and Navneet, thank you so much for joining us on this edition of the F&O Show and giving us your perspective. But with that, it's a wrap on this edition of the F&O Show. Up next, we get you a chat of Sridhar Shivaram of Enam Holdings.